Sidekick Accounting. And today I wanted to talk to you about doing your own internal tax structure audit. So you might be saying, oh my gosh, that's a word mouthful. What exactly does that mean? Well, let me tell you a little bit about why I'm doing this live. So the past couple of weeks, really the past couple of months, I've been doing a volunteer consulting opportunity with WIBIC. If you're in Wisconsin, you may be familiar with the organization. It's great. They do a lot of business education. I have done classes with them or have put on classes for them for the last probably 6 years. And they're just a really great organization that really has heart for helping small businesses be successful. So in this opportunity to do some consulting with WIBIC clients, I've been having a lot of conversations around their finances because obviously I'm an accountant and that's why they're doing a consult with me. But we've been talking with many owners and both in WIBIC and then outside of WIBIC because it's that time of year when people start to think about their taxes. So I've been getting lots of calls from the community as well and just in general. And this conversation has come up a lot about how to pay yourself. So I'll ask owners, how are you paying yourself? Or it'll come up in conversation. And I've been a little bit worried because a lot of business owners are paying themselves incorrectly. And now you don't want to pay yourself incorrectly because depending on how your business is structured, you might be out of compliance, you might be double taxing yourself. There's a lot of worry around it. And it's really important because you have a business to pay yourself. So you want to be paying yourself, but if you're not, there could be a potential issue. If you're doing it the wrong way, there could be a potential issue. So I wanted to just spend a little bit of time to talk about looking at your tax structure so that you can determine how to pay yourself, because that's step number one. So I'm going to share, hopefully, I haven't done this in a while on Restream. I am going to share a copy of an EIN letter. So this is the first of how to identify how you're paying yourself. And basically, you probably have seen this. You probably have one if you're an LLC. But down here, there's going to be this section that's going to tell you what type of form you're going to file your taxes on. Now, if this part is blank or you don't see this, whatever you would call it, portion here where it's separate from the text, where it has a form number, then you are most likely a single member LLC. And as a single member LLC, okay, so we have that part. So just to recap, make sure there's something. It typically will say one of 3, maybe 4 things. So one, you might have a nonprofit where it'll say Form 990. You might have a partnership, which is what this one is, which is a Form 1065. It might say Form 1120S or 1120, which is either an S Corp or a C Corp. So taking a look at your EIN letter first can give you a good understanding of what type of business you have. So take a look at that first. The next thing you want to do is look at how you registered your business or how whoever registered your business in the state will, because that should confirm whatever is on the IRS letter. If there is nothing in terms of forms on the IRS letter, you are a single member LLC if you filed as an LLC, which means you should not be on payroll. You should not be getting a W-2. You should not be running your pay through a payroll system. If you do, you are inadvertently double taxing yourself. So don't do that. What you should do instead is do a check to yourself from your business account to your personal account. You should do a transfer to yourself. You should pull money out in cash, if you will, pretty much the 3 options on how you should pay yourself. And then it's considered a draw. That money that you pay yourself is not considered a business expense. Okay, so then you get taxed on the sales minus all of your expenses, and whatever's left over is your net income, and that's what you get taxed on. Doesn't matter how much you pull out of the business, you will still get taxed on that portion. This is important because you want to make sure you're paying yourself and you're keeping your business and your personal stuff separate, but you want to make sure you're also not double taxing yourself. If it said a 1065, you might be paying yourself guaranteed payments, which is basically like a certain amount among partners that's determined. That is also considered a guaranteed payment, but then it's also considered like a draw would be. So that should be on the bottom of your P&L, part of all of your expenses in your business. And you would also not run it through payroll. So partnership, single member LLC, sole proprietorship, do not put yourself on payroll. If you are a S Corp or you're an LLC who's been elected to be an S Corp, you would put yourself on payroll. And now to be in compliance with IRS guidelines for being an S Corp or being taxed as an S Corp, you want to make sure you're paying yourself a reasonable compensation, which basically means if I'm bringing in $500,000 and I'm only paying myself $50 and I have a net income of $200,000, that is not reasonable compensation because your business can support more. More likely you're doing a lot of different things above and beyond, what somebody making $50,000 a year would do in terms of a salary or annual compensation. So you want to make sure it's reasonable compensation for your organization. You do want to make sure you're on payroll, so you're getting a W-2 and getting taxes withheld. And then whatever's left or whatever above that salary you want to take out is considered a distribution. And now I know that was a lot of information all in one time. So my next thing is that if you need to talk through this, or if you see something on your EIN form or your state form and you're like, oh, this doesn't jive with what Megan was saying on a base level, give me a call or call your person that put your business together, call your lawyer. They should be able to give you some more additional insight, or call the accountant that you currently have to talk through it with them to make sure that you are paying yourself correctly, that you're in compliance, and that you're not double taxing yourself. So take a look, audit your tax structure. You're all good to go so that you can be ready. And if any changes need to be made before the end of the year, that you can still make them. All right, that's all for today. Bye.